Sheena Reynolds, who's the secretary of the bank, and we have got the communication team. We would like to just very briefly retouch the role of the South African Reserve Bank, look at the macroeconomic overview and outlook. The one that is in the annual report is already very outdated because the annual report was published in June. And so that report is now today. And then I will also then do the highlights from the annual, the CEO of the Prudential Authority to do the Prudential Authority report. Say that the bank's mandate in terms of the Constitution is to protect the value of the currency in the interest of balanced and sustainable economic growth. The Financial Sector Regulations Act, which came into effect in August 2017, in South Africa. The SARB's key functions, which are captured in the South African Reserve Bank Act, include, amongst others, issuing of banknotes and coin. We regulate and supervise certain entities in the financial system. We ensure that there is effective functioning of the national payment system, and this national payment system is one of the least understood parts of the functioning of the bank. People do not facilitate that. It's actually the national payment system, which is run by the South African Reserve Bank. We also monitor the country's remaining exchange control regulations, and we are also a structure of the shareholding of the Reserve Bank. We have a shareholding structure, but the public is the beneficiary. The SARB is one of 6 central banks that still have private shareholder participation, 200,000 rands a year. 90% of any remaining surplus accrues to the government after setting aside members of the board, some members of the board, but the shareholding provide members to a board with limited powers. Since 1996, several legislative changes were made to clarify each shareholder, together with their associates, is permitted to hold. The board helps ensure good governance, but does not have a say on policy or regulatory decisions. The government appoints 8 members, including the 4 executives, that is the governor and the 3 deputy governors, and the shareholders appoint the other 7 members of the board. In terms of the macroeconomic outlook, which is where I would like to move to, it's not a pretty picture. The COVID-19 has had a huge trading partner was also adversely affected. Just to put the things in context, that with the global financial crisis, South Africa's major trading partners had a contraction of 4.7%, with the recovery coming in 20, much lower, as we had to respond to the health crisis, and the countries went into by 8.2%, with a recovery that starts in the 3rd quarter of this year. It is from a very low starting point. What you see on the panel here are the subsectors and how they had been affected. The tourism sector had been the most, because even as the countries were opening up, people are still reluctant to actually travel. So you could see that at the bottom there. They have recovered to pre-COVID level. We have seen recovery from the charity. There had been a big knock for the hotel sector. But in total, what we are seeing is that in a growth on a seasonally adjusted annualized basis of around 45. There are others economy with major job losses, and as we had seen when the figures were released, the labor force figures were released, it seems to indicate that unemployment has really happened, because what has happened is that the labor force had shrunk because people had stopped looking for work. The economy was under lockdown. It was no point in people looking for work. But the important figure to focus on here is that the number of the employed people actually declined in absolute terms, but should actually be focusing on. Moving on, that the GDP would grow faster in 2021 and in 2022 after a terrible 2020. The slide there shows that the contraction of this year of 8.2, we expect that there would be growth of just over 4% for 2021 and 2.6% in 2022. We must explain that big rebound in 2021 is because you have got this big contraction in 2020. So when the economy recovers, it looks like a big bounce, and we call that you are in a boom. We are not quite in a boom. If anything, we expect that the economy will only that strong recovery in 2021 and growth still in 2022. We would still not be where we were. Most peer countries, part of that is that when we were hit by the COVID pandemic, the economy actually worse. And you could see that apart from Mexico and Peru, the other countries had contracted, but had contracted much less than what we had seen the contraction in South Africa. And this had happened despite lots of stimulus. The panel on the left shows the amount of stimulus that countries had actually provided. We are from on this slide, the red line, and you could see that compared to the universe, there are only 5 other countries outside. On the monetary policy side, a similar picture, but in the case of the monetary side, we had acted with scale, and we also acted with speed, and the amount of in the world in terms of peer comparisons. But our recovery is expected to, many of the countries are coming out of the show in it is that we are underperforming peer countries. In as far as the year 2020 is concerned, but we experienced load shedding. And what this panel actually shows you is that 2020 is the worst ever load shedding year, despite the fact that we have had a weak economy. And the bars here and the blue bars show a stage 1 load shedding. And you can see that it had been a terrible year in as far as electricity. Is that investment has been falling, and with investment falling, that affects our long-run growth capacity, which means that even as you stimulate the economy, the ability of the economy to respond to that right going, we are still faced with this electricity constraint, as we had witnessed with load shedding starting again in July. The interesting thing, though, is that we have had on the inflation side fairly good performance, although food price inflation is a bit higher than last year. It is still way below the long-term averages, and that had helped to contain the having very good rains this year. And if we have good rain, that could contribute to continuing to have food price inflation actually contained. Be contained, as food inflation was contained for this period and was actually lower than its long-term average. And so inflation had been controlled, and that helps because inflation had remained within our inflation targeting range of 3 to 6, and it is exactly this performance on the inflation side that provided us with the policy room to provide the monetary stimulus that we had seen. But as you analyze the inflation picture, I need to part of this equation, and as you would have seen here in the during the lockdown, we had a significant decline in the oil price. Countries were in the lockdown. Even here at home, because of the lockdown, people were not driving, and so as a result of that, we had this collapse in the oil price, picking up a bit, but it is still nowhere close to the high points that we had experienced previously. Now, yesterday's inflation and inflation as we see it today is important. Is on what inflation is going to be in the future. What we are actually seeing through lower inflation, and that augurs well for the performance of the economy going forward. Because if people expect that inflation is going to continue to remain within the target, that provides the space for continued support. Repeat that just one bit. That is the food price inflation. That the prices that are administered in the main within the control of government, whether central or municipal, have been rising faster than the actual inflation. The average latest for electricity this year is 6.7%. For water is 10.1%, and for rates and taxes 4.6%. And by contrast, headline inflation is expected to average 3.1% this year. And so the other way of looking at it is that for the period to date, and that is a big concern for us. It then says that inflation is contained elsewhere in the economy, but the prices that are actually controlled by different arms of government have been rising faster than what we had actually seen on the inflation during this period. Same goes for municipal rates and taxes, and all of them, as you can see, they have risen faster than the rate of inflation, which is that green line at the show what has been contributing to the performance of inflation. Inflation is back in the target range for now, but just barely. In May and June, inflation was below the lower end of the inflation target value. And I think that it's important to also elements of the price formation process. and had to use statistical techniques to impute what they think would have been the price rises of those particular categories of inflation. But be that as it may, inflation remains contained and it is not our expected to remain within target, provided the space for the central bank to provide monetary policy stimulus. I said that we acted with speed and we acted with scale. And what that meant is that the prime lending rate now is at a 55-year low. That is that blue line. What has been the effect? What we have seen is that the monetary policy stimulus that had been provided shows to you is what has been happening with mortgage advances granted, and you can see that there had been that figure because of the lockdown in April and in May. People were not quite looking at couldn't take place. So when you had a reopening of the economy, you saw that rebound, big rebound, actually taking place. But what we're seeing is that that rebound is faster than we had seen in the other years before 2020. The low repo has also been helping with government borrowing costs. Debt is higher, but average interest rate is actually lower for the government. What this shows is that we were able to take the government debt, the amount of interest paid as a percentage of that debt has actually come down. How has it come down? It has come down partly because government had been borrowing in the short end of the curve, because short rates are so debt servicing costs. So that is what we have seen from the economic. Walk you through the highlights of the annual report. This annual report provides readers with the SARB's response to the COVID-19 pandemic, which we have seen the economic effects beginning to filter through in the economy. It's also a concise account of the SARB's strategy, and importantly, the impact of the SARB activities on broader society. It also does focus on material, financial, and non-financial information. Our response to the COVID-19 pandemic, as I had said, it was done with scale and with speed. We lowered the interest rates by 300 basis points in record. We had made liquidity available to the South African banking system through a range of facilities, in addition to regulatory relief to the financial sector to help maintain the flow of credit in the economy. The South African financial sector was providing debt relief and debt restructuring, and that meant that it was putting a strain on their capital adequacy and their liquidity positions, and we provided regulatory relief to allow them to dip into their buffers. They would tend to, when a shock like this one, they are able to utilize what they had provided as a buffer. We also supported the medium-sized enterprises, starting at 100 billion, with an option to increase this to 200 billion over time. And importantly, was that we saw that there was a dislocation in the bond market to purchase bonds to improve the functioning of the South African market. It was important for collateral must be priced, and so we should be aware of what the value of the collateral is. And if you've got a dysfunctioning market, it is difficult then to price the collateral, and hence our stepping into the bond market to make sure that the market continues to function and that collateral could be priced adequately. Indirectly, this also benefited government because government funds itself in the auctions every week. And if you have got a dysfunctioning market, government would not even be aware as to whether the price that they are charged is reflective of market conditions. So we had to make sure that the market is functioning so that government could also fund itself. We have a constitutional mandate. We had to express this covered in the annual report. We have got 5 focus areas of that strategy. The first one being to maintain inflation within the target range. The second strategic focus area is to protect and enhance financial stability. And the third one is to promote and enhance the soundness of the institutions that we are responsible for regulating. And fourth one is to enhance to ensure cost-effective availability and integrity of South African banknotes and coins. Process objectives and cross-cutting objectives, which then are the building blocks that enable us to deliver on these strategic focus areas as we had spelled out. And in terms of the performance, the slide gives the performance against those it has come out within the target and will continue to be within the target over the next 2 years, according to our forecast. And importantly, is that it will be closer to the midpoint of that inflation targeting range, and that gives us flexibility within the inflation target range. With respect to strategic focus area 2, which has to do with financial stability reporting, however, the COVID-19 pandemic will have major implications for the economy and the financial system. Methodology to determine whether a bank is systemically important and communicated this to the designated bank and the public in the financial stability review earlier this year. With respect to strategic focus area 3, which has to do with the soundness of South African sub-regulated financial institutions, there were no failures based under specific regulatory action. All regulated financial institutions have been closely monitored of governance and risk management practices. And the Prudential Authority is leveraging technologies, Prudential Authority report, which we would deal with later. The strategic objectives and are crucial for the delivery of our mandate. And the fourth focus area, which has to do with the functioning of the South African financial markets, the objectives there have been clearly defined. However, work to develop the practical formulation with respect to these SFAs was achieved late in the reporting. Has to do with notes and coins. The currently producing subsidiaries delivered all notes and coin orders is being redefined. Let me then, Chair, move to the financial highlights, and we'll round this part of the report. Financial reporting year, it was lower than the prior year's group's net profit after tax due to the loss of 2.77 billion rand. It is mainly due to the expected credit loss allowance of 2.3 billion rand and an impairment on the land bank promissory notes of 600 million rand. The SARB group net profit after tax of 2.85 billion includes an impairment loss on African Bank Limited of 2.3 billion rand. This is a valuation loss, African Bank. And the South African Mint net profit after tax of 900 million rand or 0.9 billion rand increased by 42.2% compared to the prior year net profit after this is largely attributable to strong Kruger Rand sales. The profit and loss breakdown, what you have there at the bottom is the performance of each one of the subsidiaries of the South African Reserve Bank and how we arrived at that 2.8 billion rand in group profits. We do have a social investment and support program as the SARB, and our corporate and investment continues to focus on education, with the monetary policy schools challenge being our flagship program. The MPC schools challenge was over 3,200 learners in over 400 schools annually. The SARB provides bursaries and support for the disabled. The bottom part of that chart just shows you what we had just spelled out. The MPC Schools Challenge, which is a partnership with the Department of Basic Education, helps us to communicate and deepen the understanding of the SARB mandate amongst grade 12 for arts and culture. It's funding of bursaries for young people studying at tertiary institutions, and the funding, and this has reached 78 beneficiaries. We also do support the universities for, and we do this now through partnerships with universities known as chairs to derive skills in finance, economics, and central banking, as well as support for financial and economic journalism students at UCT, Wits, Rhodes, and the University of Pretoria. And this program reaches 98 beneficiaries. We have the SARB does not have a presence, and this reaches 12 schools. The SARB employee volunteer program, how the way in which it works is that it
carry on.
The staff schools, and then the Reserve Bank provides further funding to enable the staff to deliver for those schools that are in need. We have our performance against BRRR progressed well from 19 points in financial year 2018-2019 to 22.7 points for the financial year 2019-2020. The 3.7 point increase is mainly attributable to increased use of technology in managing BRRR accreditation information from the suppliers, the middle enterprise suppliers, and it also focusing on awards of commoditized items and small-scale services to EME suppliers. In terms of the staff composition of the SARB, female representation increased steadily from 29% in 2016-2017 to 35% in 2019-2020. Indian male representation has been increasing by a small margin from 10% in 2016-2017 to 14% in financial year 2019-2020, and white female representation decreased from 42% in 2016-2017 to 29% in 2019-2020. 20. And that is what then reflects in the improvement spelled out here. In terms of the composition of senior management, we have had African male representation increasing from 51% in 2015-2016 to 33% in 2018-2019. African female representation increased from 39% in financial year 2015-2016 to 49% in 2019-2020. And white female representation had decreased from 46% in 2015-2016 to 34%. Resource highlights, just to say that the SARB has conducted 3 employee engagement surveys to gain insight improvement in dimensions assessed in the employment engagement survey. The SARB's total staff composition is 76% black and 24% white. Executive management is 100% black, top management white. The South African Reserve Bank has spent 63.6 million on training and development, and this equates to 1,909 employees, or 87% of the staff complement attending a training intervention in 2019-2020. We do plan for the future. We provide for what we call the coverage ratio of critical roles, and what that means is that we work a pipeline of, if we lose this crucial skill, would be the people who of 91%. That has declined this year to 82%. It's a ratio that we keep our eye on. It doesn't mean that we can't do our work. All that it means is that the readily available skill within the SARB to provide for that role. We do also provide for what we call regrettable turnover ratio, which is 1.1%. This year it has declined. The way in which this ratio works is that we have identifiable loss, and we have been able to retain the bulk of those, as you could see with the improvement of the regrettable turnover that we have. And Chair, that concludes the SARB annual report. I will take your guidance as to whether you want to deal with the SARB report now, because I see in terms of the agenda, you have divided the agenda items, in which case we can pause and take the questions. And then once we are done, we can then want to take both reports at the same time.
Thank you, Governor. According to our program, we'll receive the 2 reports following each other. Then we'll have deliberations in item 5 for both reports.
Thank you very much, Chair. Deputy Governor Naidu, I have stopped sharing. You can share from your side.
Thank you, Chair. Thank you, Governor.
If you're struggling with the sharing, I can share from this side, and you can guide me and tell me what slide.
Okay, Chair, why don't you flash the slides? They're only 5 to 10 minutes, Governor. Okay, Governor, you continue sharing your slides. There are only 5 or 6 slides. Turn slide 40, please, or you can go to slide 41. Chair, members of Parliament, thank you very much for the opportunity to present on the annual report of the Prudential Authority. I'll take both the report and the slides that have been circulated as read. This slide outlines 2 committees, the Prudential Committee, which is a governance committee that oversees the work of the Prudential Authority. It is chaired by the governor and consists of the 4 governors of the Reserve Bank. Sang Denzel Bostander, Faisal Jina, and Unati Kamlana. 2 of those on the left are responsible for frontline supervision, and the 2 on the right are responsible for risk support and policy support to the Prudential Authority, and to date is the safety and soundness of individual regulated institutions, and we contribute towards financial stability, which is a key objective. Chair, this is a summary slide outlining our response to COVID-19. I know there have been some specific questions on that. As a regulator, I think we were in the fortunate position where, because of the soundness of our banking system and financial system, we could provide significant regulatory relief to enable banks to continue to lend to their customers to support the economy. Generally, in a crisis, you get 2 things happening. You get a significant fall in demand for credit, recession, and prolongs the crisis and slows down the recovery. Our policy objective has been to try and mitigate that as much as for their customers. And Chair, while it's dropped to fairly low levels, credit extension is still positive in South Africa, which is actually quite unusual on a global scale. That suggests that notwithstanding both the fall in demand for credit and in some cases increasing risk aversion, we have continued to see lending and support to customers. Chair, the 3 main things that we did was normally if a bank restructures a loan, it attracts a higher capital requirement. We changed the regulations to enable the banks to restructure loans, to provide payment holidays without attracting higher capital requirements. We reduced or provided criteria in which banks can reduce their capital by up to 3.5 percentage points, which again further enabling or providing resources to the financial sector to continue to lend. In addition to that, we strongly advise those not be paid, and we provided several other guidance notes to the sector. Governor, you can move on. Chair, this slide merely by the life insurance sector. So, for example, on the asset side, in 2019, we had assets of 3.1 trillion rand. That should read 3.1 trillion. Sorry, an error there. Assets, composite insurers and reinsurers making up the rest. So over 85%, 90% of those assets are in the life insurance sector, Chair. Chair, we can move on to slide 44. Sorry, 44. Chair, this is merely a list of the administrative sanctions that we imposed during the financial year, mainly for AML CFT compliance breaches. The reasons and the amounts are listed there. And Chair, the last slide is the number of applications that we've received and are in the process of considering. I should state that due to COVID-19, there has been a slowdown in the process of considering license applications. It's been very difficult to get the kind of information that we need from entities. Chair, but if I could summarize, 2019-2020 was the second year of operation of the Prudential Authority. It was a good year in the sense that we have embedded the PA. We've built an integrated organization with banking, insurance, and financial market infrastructure supervision. and we continue to strengthen our IT and data capabilities and our human resource capacity. Chair, let me stop there and we can then take questions later. Thank you, Governor. Thank you, Chair.
Thank you, Governor. Thank you for the presentation on the annual reports of the bank and the Prudential Authority. Members, it's our turn now to engage the two reports. Sister Tebu, will you assist me in identifying members who want to make comments and ask questions? For now, I see Dr. George. Can members raise their hands on the platform? Honorable Abraham, Honorable Rolong.
Only 3 people here.
Honorable Shivambu. Do you have the same hands from your side, Sister Tebu, as George, Abraham, Rolong, Shivambu?
Yes, that only 4.
Okay, for now. Okay. Those who would like to speak or ask questions, they will indicate in the process. Let me go to Honorable Dr. George.
Thanks, Chairperson, colleagues. Thanks very much, Governor, for your presentation. Very interesting as usual. Why would that be? And how did you reach that conclusion? And also, then, before the pandemic began, our economy was already underperforming. Has the bank done any research into why that is so? And then also, finally, the bank has been buying significant quantities of government bonds. Why is this happening? But what I'm interested to know is why is the market not capable of functioning to actually
approach Honorable Abraham? Noxie.
Yes, Chair, thank you so much. Are we slow in coming out of shock compared to other countries in terms of our economic recovery? My question, therefore, Chair, would be on the actual annual report, the basis point since January. My question is whether this has been informed by the COVID-19 pandemic or just the economic decline that was there from the beginning of the year. Secondly, Chair, the Governor mentions a range of facilities that they have afforded to the banks in addition to their usual range of facilities that have been made available. And in terms of financials, we pick up from the report that the governor gave that there's been 2.8 in group profits. Now, how does this figure compare to the previous years? Do we detect growth or do we detect decline? And the second last question for me, Chair, is the appreciation of social investment support. And if the governor can just go to town in terms of explaining to us as a committee how do they ensure a nationwide beneficiation that the Reserve Bank did in this regard, that is in terms of social investment support informed specifically by the COVID-19 pandemic. And lastly, Chair, on the Prudential Authority report, there's an issue on the bank and their restraint in terms of giving out loans from the fund, from the COVID fund that was guaranteed by government. Has there been any role that the Reserve Bank has had to play so that um, the banks are able to disperse the COVID-19 funds that were targeted for struggling businesses? Thank you, Chair. Thank you so much to the presenters as well. Thank you.
Thank you, Noxie. Murolong.
Well, thank you very much, Chairperson. Let me also join members in welcoming the presentation by the Governor. I only have two questions, Chair. One is that, are we able to get an indication from the Reserve Bank of how much government bonds the African Reserve Bank is willing to take on government bonds? Now, the last question, Chair, is, the loan guarantee scheme has courted controversy given the size of the package announced and how much has been actually spent. Does the Reserve Bank have a view on this matter? And why should a stimulus in terms of guarantees exist if it is not utilized effectively? Thanks, Chair.
Thanks, Murolong. Honorable Shibamba.
No, thank you, Chairperson, to relates to the committee process in terms of the legislation that we have introduced on the nationalization of the South African Reserve Bank. So I would want us to have deliberation on that, Chair, in terms of missions into the legislation. In the manner the legislation should be handled. So I think that is one issue that we should raise, because we're talking about the Reserve Bank whose private ownership must be discontinued in terms of the agreement. And then the second issue that I want the Reserve Bank to speak to is in relation to black ownership of the banks and of the insurance companies and all the financial institutions that are regulated or overseen, licensed by the South African Reserve Bank. Is there any progress? And where the deliberations in the previous parliament in terms of the role of the Reserve Bank in transformation of the financial services sector? What has the bank done towards achieving an ownership and control patterns that are reflective of South Africa's demographics? But I also want a specific response on how is the licensing of Discovery Bank not conglomeration, because the people who control Discovery Bank is the same people who control RMB, which are very huge financial institutions. How is that not conglomeration in the manner that it is? Aren't we fed that concentrating bank ownership and control in few hands in the manner that it is? When we give licenses to the usual suspects of people who have been in control of the financial services system before apartheid, during apartheid, and they are just, we want to get a clear response on is which countries are the largest destinations of South Africa's financial outflows, both legitimate and unlawful, both lawful and unlawful. Where is South Africa's money going to in terms of what it is? I think that will help to also respond to the question of what has been the role of the Reserve Bank in fighting these illicit financial flows, because there have been many commitments made here that the Reserve Bank has financial flows in collaboration, of course, with other relevant entities. And I think that a proper understanding of that will be an outline of the destination of most of the monies that are leaving South Africa, both lawfully and unlawfully, through your system in terms of what could happen. I don't know. I think that both the governor and the Minister of Finance over-exaggerate the extent of what is said as the stimulus package into the South African economy, because majority of that component is loan guarantees, majority of which was not medium enterprises, which do not have access to the financial services sector in terms of loan guarantees and whatever form of loans that they could have acquired. Like, of course, there was in government an allocation of 200 billion guarantee scheme, but the last time we checked, less than 15 billion of that was utilized. So I think that these over dramatization never had any meaningful impact in South Africa's economy. So those are the first round of questions, Chair. And I'll plead that we also talk as a committee to the legislation which already has been introduced in the committee as to what becomes the process of these continuing private shareholders from the central bank. Thank you very much.
Thanks, members. I think we will also respond to the issue of the legislation process. As far as I know, it is in the program of the committee. I think the Secretariat will indicate that, but somewhere in November, I think there's going to be, as I've said, Secretariat will have to look at the program before we conclude the meeting and clarify as to where are we. I usually don't like to ask questions, but just to make an input, probably you might want to respond to that. We have never had this kind of economic crisis lasted almost 5 years, from 1925 to 1934. And this lockdown pandemic doesn't seem like something that will just go away in the next year or two. As you have properly projected, and stats from Stats SA, we will continue to lose jobs. The past 2 days, we have received reports from Treasury and SARS, which also gave us the same figures, that 2.2 million jobs have already been lost from end of March till now. The coronavirus has battered the economy and the government finances. As I've said, that we have never been in a deepest crisis like this for almost 90 or 80 something years. On their own, can be able to revive this economy without a drastic state intervention. And that state intervention also include the Reserve Bank. Whether in the light of this, what has happened, is it not time that the Reserve Bank look at itself as an active agent of economic transformation and job creation, and broaden its mandate? We acknowledge what the bank has done in terms of reducing the repo rates, and other in other platforms raised their views in terms of broadening the mandate of the Reserve Bank. Probably that was before coronavirus pandemic. Now the coronavirus pandemic is here with us. It's a fact. Businesses are closing on it, have the highest stimulus packages into the economy, but with less impact into the lives of our people. Is it not time that the mandate of the bank should be beyond only inflation targeting, that is to defend the rand and look at broader mandate. Unless you have members of your family and relatives and people in your community whom you have seen losing jobs, their houses, and they are looked at, we can't run away from it. And when we debate it, we just become dismissive. We have to be factual. Reports of the governor and the deputy governor, as other members have done. Over to you, Governor, and the deputy governor.
Thank you very much, Chair. I will take 13 questions and pass the others to my colleagues. Deputy Governor Naidu, if you could deal with all the questions that have to do with the loan guarantee schemes, the licensing, the transformation of the financial sector, the illicit financial flows. Those seems to have your name written all over there. And those questions that come from Honorable Abrams and from Honorable Shivambo and Honorable Morolong, the bond buying program and why we had to do that. And then all board and how much bonds we are holding. And then I will take Honorable George asked the question about why our recovery is slower than peers. Let me put it this way. COVID-19 simply made what was a bad situation worse. This economy had its own structural challenges even before COVID-19. These problems were captured in the government's diagnostic report, which was a precursor of the National Development Plan. So, the things that we were supposed to do in terms of the National Development Plan were not done, and because they were not done, the economy's potential growth rate, which is the maximum rate at which the economy can grow, has been declining over a period of time. And so what that meant was that if there is a sudden economic shock, the economy gets not just why would we be underperforming other countries in the recovery with those structural constraints? I was highlighting earlier on that in July we were hardly growing. The economy was just opening up, and yet we started to have load shedding. So electricity is now a binding constraint on me. Known. They are within the control of the publicly elected officials, and they know what it is that you can't change the structure of the economy through monetary policy actions. You change that through structure. Countries, when they are now looking at the recovery, they are building on the structural strengths that they had built. But because we have not dealt with our structural constraints, we are unable to move out of the program. Raises the question of what was the monetary policy adjustments informed by COVID? Mainly, yes, but flexing monetary policy in January. Because our outlook for inflation in January said to us that the midpoint of the inflation targeting range, and because of that, it provided the scope for us to commence the process of monetary policy relaxation or stimulus. We were only able to do that because the inflation outlook had improved and inflation was expected to remain contained. It is that enabled us to start that. When the COVID-19 then hit our shores and became more pronounced, we decided to accelerate the process of providing monetary policy relief in March. And when the lockdown was extended further after the initial lockdown, we deemed it fit to call an extraordinary meeting the Tuesday immediately so that we could provide further relief rather than wait until the main meeting of the monetary policy. COVID meant that we have got to relax policy both in terms of the speed at which we had to do it. There is also the issue about the facilities that were being provided for the banks. What were they? How were they done, and what were they for? It was a question from Honorable Abrams, which is an important point to raise. So you can deal with that because it was also part of the bond purchasing. The profit performance, we have stated that the profit performance was indeed a decline in profits from the previous year. But as we said, the bank remained profitable, and I am trying to go to the relevant slide. It is actually captured in a slide entitled Financial Highlights, and the profit had come down. The previous year, it was 5.8 billion rand, and it had come down this year to be 2.8 billion rand. Now, some of the things that drive the SARB's profit performance has to do with international bond yields, and what actually also happens to the profit rather was driven in the main by the provision for the loss on the holding of land bank paper, and secondly, a valuation adjustment of the shareholding in African Bank Limited. Social investment and support nationwide. Let me say that the most extensive social investment for the Reserve Bank in terms of reach is the Monetary Policy Committee. And this now, as we have said, it has now reached over 3,200 letters, and it had reached over 400 schools. And that is now countrywide. We have our people on the ground working with the educators, working with the departments of basic education in the various provinces to extend the reach of this program. It is a nation. The disabled, it is a niche that we decided to pick. Why did we pick this niche? One of the things that we had was that we were not doing as well as we should be doing in terms of attracting people with disabilities. And so we decided that that is the sector that we should support, and through that process we would be able to identify people that we can bring into the bank who have got disabilities. We have got about 2 or 3 that had come through that program in the bank. Did we change our social investment program in the event of COVID? No, we didn't change our social investment program. but we did do something else. In line with the call of the president, myself and the deputy governor gave up a third of our remuneration, net remuneration, for a period of 3 months. And the staff of the Reserve Bank also decided that they would want to give away 25% of the bonus pool of the Reserve Bank to the Solidarity Fund. And in addition to that, there are staff members of the bank who said that they have got leave. They decided that they would encash that leave and give that fund, that money that is due to them to the Solidarity Investment Program. Yes. So shall we start with you, DG Chasivana, the mandate and growth?
Thank you, Governor. So let me start by responding to the questions asked by government bonds at the end of March. And the primary objective of this was to ensure that markets continue to function. So Honorable George asked, why were the markets not functioning? And what we saw towards the end of March was that there was a lot of selling of government bonds and not enough buyers of these bonds. And this was driven by a combination of what was happening outside of South Africa in terms of financial markets in general. There was a lot of risk aversion among investors as the level of COVID-19 infection started to spread and increase globally. And there was a lot of sell-off. And generally what happens when there's panic in financial markets, there's a shift to what are called safe haven assets, which would be buying stocks in the US and in countries like Japan. So there was that element, and it not only affected South Africa, but emerging market countries in general. There was also a South Africa specific event in that there was expectation that we would be downgraded by the last of the credit rating agencies that to sell their holdings of government bonds in anticipation of what would happen with this downgrading of South Africa's sovereign bonds. And the combination of the two factors therefore result in a very important part of our capital market in the country. Yes, we have so the SARB then took steps to normalize conditions in the government bond market. And what we were doing as a SARB was not to take over the role of the market, but to try and simulate what would be natural market conditions. And you would realize that we have been buying government bonds in the secondary market and not in the primary market, because the focus was on ensuring that the market would function rather than monetizing the deficit that government has had. So when one looks at just the government bond market, given the size of government issuance and the level of national savings that we have, one does need to have healthy participation of both domestic investors plus foreign investors as well. So our purchases of government bonds were largely during the months of April and May, when we saw a lot of sell-off and very limited demand. So we bought government bonds for about 14 billion rand in April, 10 billion rand during the month of May. But as market of supply and demand in the government bond market, we have slowed down our purchases of bonds. So the Honorable Morlo wanted to know what is the size at the moment. Excuse the pun. It's not that large. So 39 billion rands are the current holdings of government bonds. And in terms of the maximum amount, there is no maximum limit that is prescribed. There is a limit that is prescribed in terms of our purchases in the primary market. Unfortunately, though, we cannot announce in a public platform what the size of purchases could be, because this is market sensitive information. So regarding the facilities that we provided for banks, Honorable Abrams, so what we found also from around the middle of March was that banks did not have sufficient access to the funds that they would normally utilize to continue with their normal lending activities. And this was largely because some of the large depositors to the banks were wanting to hold on to the deposits that they had in banks in order to be able to call on these funds. So if you were a large business at the start of the COVID-19 crisis and you were a revenue stream, I still have a fixed set of costs, but if conditions continue to deteriorate with COVID, this amount of March, the SARB therefore borrow cash. So normally banks SARB in order to meet their cash requirements fully. What we did during this period was we provided additional facilities. So we started off by providing a daily facility so banks could come to the Reserve Bank twice a day in the morning and the afternoon to come and get some. Added a lending facility which was over a longer period, what we call term lending, and we're still quite open for this to be a term lending of about 3 months. Thank you, Chair. I'll stop there.
Thank you, Chair. Chair, just to add to Deputy Governor Chazibana, I think year-to-date foreigners have been net sellers of about 69 billion of South African government bonds. Chazibana, I'm sure, would know the right number. Thank you very much for the questions, Chair and Committee. Let me start off on the loan guarantee scheme. The loan guarantee is a partnership between the Treasury and the private banks. Negotiated between the Treasury and the private banks, with the Reserve Bank playing a role of administrator of the scheme. We take no direct risk in the scheme, but we do help to administer the scheme. Chair, the nature of the agreement is that it's a risk-sharing arrangement, with the banks taking a certain share of first much higher. However, I do think that there's some very good reasons why the take-up has not been higher, and I think it's important to bear those reasons in mind. The first reason is that at the end of December, and you approach your bank, you've been impacted by COVID, and if you're a very good customer, the bank is likely to give you the loan or the credit. They have their own risk appetite for that. If you're somewhere in the middle, I think that there's a role for the loan guarantee scheme in the form of a partially guaranteed amount. By the time that the loan guarantee scheme actually kicked in, which I think was on the 12th of May, the commercial banks had already done a significant amount of debt restructuring and provided payment holidays to a significant portion of its customers. About 24% of individual customers had restructuring, a slightly lower proportion of corporates, but a significant amount of money. So, Chair, there have been 3 buckets of support that the banks have been able to provide. The first is payment holidays, the second is loan restructures, and the third is through the loan guarantee scheme. If you take all of those 3 in total, that's relief of direct rand on gross loans and advances of about 700 billion rand. That's quite significant. That's a fairly significant share of the total loans and advances in the economy. So I think the timing of the loan guarantee scheme, the nature of the risk sharing are 2 reasons. Chair, in addition, unfortunately, there is a fall in demand for credit when there is economic uncertainty. In staff or to stop operations and take full of confidence that things will turn around and incomes would grow in the near future, they're likely to take debt. But if they are uncertain of the economic prospects going forward, they are not likely to take on additional debt. And I think that it's important for policymakers to understand that the demand for credit falls in part because of the uncertainty around economic prospects going forward, Chair. So the SARB's view of the loan guarantee scheme is that it has played a positive role in supporting lending to the. In general, when you have a crisis, you have a fall in both demand for credit and a fall in risk appetite for the banks. Some of that is natural, and we have seen a fall in demand for credit. And of course, you've seen some risk aversion on the banking sector side. But in general, the South African banking sector has kept credit flowing, has supported their customers during this crisis. Would it have been their own security in a sense? I think that in general, in previous crises, the financial sector have been the crisis, and that's positive. And Chair, it has only been possible because our banking sector is safe and sound, well regulated, has adequate capital and liquidity buffers, that it has been able to play a positive role. Should it play a more positive role? Certainly. But I think the context and understanding that in previous crises, the banking sector contributed to the crisis, whereas in this crisis, they've not. I think with is the transformation issue, is the transformation of the financial sector. The Financial Sector Regulation Act gives the Prudential Authority a primary mandate of safety and soundness, but gives us 4 important secondary mandates. So in addition to the primary mandate, we have a legal obligation to take into account transformation, competition, financial inclusion, and the integrity of the financial system. Chair, we do that, the Charter, so we don't have our own scorecard. When we have prudential meetings with the banks, we discuss all 4 of those secondary objectives as well. We discuss their progress on meeting the requirements of the Financial Sector Charter, their requirements on financial inclusion. Of course, individual banks won't give you a view on competition. Integrity is largely dealt with through the anti-money laundering process, which we supervise the banks. Chair, transformation is a multidimensional objective. Black ownership is an objective. Black boards, CEOs, executives in the financial sector is an important consideration. But equally important is the ability to lend to small businesses, to the township economy, to black businesses in particular. South African banks have historically not done significantly well in lending to the small business sector, and this is a 100-year-old problem, not a 20-year-old problem. And I think that there's certainly room for progress and improvement in the ability of the financial sector to support small business. But Chair, in general, the financial sector is making progress on all of those dimensions of ownership, procurement, human resource management, and the diversity of the people that it lends to. Again, we use the Financial Sector Charter and each bank's performance on the Financial Sector Charter as a metric when we discuss with them. This is a responsibility we share jointly with the Financial Sector Conduct Authority. Chair, the last category of issues I want to deal with is the financial outflows and our role in fighting illicit financial flows. Chair, the answer to the first part of the question is fairly easy. There are 3 types of financial outflows that are legitimate and legal. The largest of those is interest or dividend payments, interest on government bonds or other bonds, and dividend payments from investments on the Johannesburg Stock Exchange. We know exactly who that goes to by name and by location. The second, purchasing imports, of which the largest category would be oil, but there's very detailed accounts of who we import from, and the money flows out to pay for those imports. Thirdly, Chair, we pay for services. A lot of those services are IT services. So when I pay my Microsoft license fee, that's a service fee that goes out. But Chair, tourism plays a significant role when South Africans go abroad and spend money. When foreigners come in and spend money, that's an income country. Of course, what we don't know is where the illicit outflows go to. We have a sense, we have a flavor, we have suspicions. But Chair, government set up an interdepartmental committee consisting of the police, the Hawks, SARS, the Reserve Bank, the FIC, and the National. There's been improving cooperation between agencies and entities in government to curb financial flows. Our cooperation with SARS with the Financial Intelligence Center has grown in leaps and bounds in the last year or two, and we're making steady progress. Chair, as an example of the steady progress that we're making, 5 years ago when I came into this job, we were between freezing accounts and forfeitures, we're doing about 200 to 250 a year, totaling at least 300 to 400 million rand. There is one forfeiture that's run into billions, but there's been a dramatic improvement in our enforcement capability. All of this is in the Government Gazette. Every time I sign a forfeiture order, it's published in the Government Gazette. There's no secrecy about this. There's full transparency. Every single account blocked has to go through a Government Gazette process, Chair. So we feel that we're making slow but steady progress in combating illicit financial flows. But Chair, even more cooperation is required between the various agencies and entities.
DG Kasim.
Thank you very much, Governor. Yeah, let me just put on my camera. The chair asks a really important question, and that is that, what role should the SARB play in stimulating the economy? It's quite important to kind of distinguish two things. At the beginning of the pandemic, an important function that we really played was almost through monetary policy providing cash relief. In other words, when you reduce the interest rate, you make two assumptions. The one assumption you make is that those who have loans will experience more cash. That is why when often we say 100 basis points reduction in the interest rate based on a model will more or less give you a 0.3 or 0.4% increase in GDP. That was a really important part of the first part of the pandemic stimulus. And it really revolves around the fact that you provided stimulus primarily in the month of March and April. In those months, there was a lockdown, spending was constrained except in necessities and so on. I think what will happen subsequently as the economy has opened up, the effect of the stimulus through monetary policy will be seen as we go along. The effect of the 300 basis points, we often say that the full effect takes about 18 months to 24 months. That's based on empirical research and so on. So that is one important part to it. The other important part to it is that one can get, I know the governor may to get a sense of what the monetary policy stance should be. So, for example, in the U.S., the U.S. has an instrument to deal with employment. In our case, we have something more technical, which is essentially similar to an employment mandate, and we call it an output gap. What the output gap means is that the economy is performing below its potential, and monetary policy has a role to stimulate the economy. So it is that our inflation targeting is a flexible inflation targeting, and it has scope for stimulating the economy when the output gap is negative, given the fact that we have, given our inflation mandate and so on. I also want to emphasize that countries that have introduced quantitative easing have done so because they basically have not had their interest rate tool to stimulate the economy. So in an ideal world, if a country's interest rate they have to go to like a negative interest rate, but one of the ways that they practically do this is they introduce their balance sheet, they buy more bonds and so on to stimulate the economy. So they use the asset channel to stimulate the economy. In our case, we have a very powerful tool, the interest rate, notwithstanding the other complementary tools in banking regulation and markets. So I believe that the SARB will continue to stimulate the economy. We are in stimulation mode. If inflation becomes even more benign, we must not lose sight of the fact that the most effective strategy, a tool to stimulate the economy. The tool that the SARB has at its behest is the monetary policy tool. And countries that don't have monetary policy tools really have to work very hard using very cumbersome balance sheet policies.
Thanks, DG. I mean, I think you have dealt with that quite well. According to my list, Chair, I think we have exhausted the questions.
Chair, there was one question on Discovery Bank licensing that I did not respond to. Chair, let me respond in the following way. That, in some ways, there is a trade-off between promoting competition in the financial sector and entrenching incumbency. Our view was that here you have a financial institution with significant heft, significant capability. We think that they can compete with the Big Four or the Big Six, and that would contribute positively towards competition in the financial sector. Chair, we should also note that since the publication of draft standards on conglomerate supervision, there have been at least 2 changes in the financial structure in the South African economy, with 2 significant conglomerates announcing unbundling transactions. I think there's a direct relationship between the publication of draft regulatory standards on conglomerates and those 2 financial transactions that best be dealt with through the competition authorities, Chair.
Okay. Let's take follow-up questions. Honorable Shwambu, Honorable Abraham.
Chair, instead of just brushing aside the question of transformation, the bank says it's a gauge of transformation, the charter on the financial services sector. Who complies, who doesn't comply in terms of ownership and all other aspects that gauge transformation currently, so that we can know what to do, because it looks like the whole compliance to transformation dictates it's just voluntary and there's no consequences when the financial services sector does not comply. Can we be given a detailed breakdown of to what extent have these financial institutions, particularly the banks and the insurance companies, to what extent have they complied to the financial services charter, so that we know who is in the wrong? And also the question of outflows. Can we be given the list and amounts of money which goes to different destinations in terms of countries? Just which countries are recipient of South African money? Because in one of the lists that was presented possibly 3-4 years ago, as well, when you gauge that against real economic activity, there isn't much, but those destinations, including some tax havens, become destination of South African money. It then gives direction in terms of where do we look at when we want to deal with the broader phenomena of tax avoidance and profit shifting, which defines a lot of multinational corporations. Please could respond to that much more meaningfully. I think it should matter to the Reserve Bank as to who controls Discovery Bank. Why even if it's competition of what? Of siblings, of a conglomeration that is from the same basket. When we've got a crisis of other entrants into the financial services sector, you as the bank, you deliberately approve a license and everything else. It should matter to the bank, the licensing institution, in terms of just who are the role players in the financial services sector, because your licensing seems to be reproducing the ownership inequalities, the demographic inequality. At that as well, we might need to be given a clearer update in terms of the African Bank exit. When is the Southern Reserve Bank exiting the African Bank? Because you can't be a regulator and owner of a bank in the manner that it certainly violates competition laws, in the manner that intervention that had to be made to African Bank. But when is the exit going to be effected from the African Bank? Thank you.
Thanks. Honorable Abraham.
No.
Okay. Sister Tebu, are there other members on your side who want to make comment or ask questions?
It was only the two, Honorable Abraham and Shivam.
Okay. Over to you, Governor, on the follow-up questions from Honorable Shivam.
And I'll ask Deputy Governor Naidu to add something here. We might be better placed in doing things, but I can tell you that if there is tax shifting and all of that, that is SARS. It's not us. We do not have taxpayer information. We do not keep taxpayer information. SARS that keeps the taxpayer information. I think, Deputy I think we could have gone further and said within the legitimate outflows, besides the dividends and the interest that must be paid, there is also the issue of whether the money flows out through the bond market because the people who are holding the bonds have sold them, or whether people who were holding the shareholding have sold the shareholding. And that is in a market, in the South African bond market, with a turnover of some 18. And because it is constantly moving, you will find it being held via a repository offshore, and it goes through that repository. But Naidu will add to that. If the monies are illicit, by definition, that means that it has gone out illegally. You do not see it. So you can't be able to tell exactly as here. There is the issue of detailed reports per individual institutions and how they have data information. The easiest thing for this committee to do would be to call the individual institutions and ask each institution, the practice of this committee every year, to receive the report of the financial sector charter. That report was being published annually, and this committee used to engage with it. What became of that, I do not know. But the committee to present that annual report. Even that annual report that was being presented, it was not being broken down per institutions. Ditto for RMI and Discovery stuff. We cannot comment with respect to that. There was particular regulatory action that was taken to make sure that there is fair competition, which depending on individual institutions, because it is within the power of this committee to call the individual institutions and ask them those specific questions. Because if we are to go and start commenting on the individual institutions, we would be of the act of this country. African Bank, yes, we would like to exit. When there is a crisis like what happened with African Bank, is the treasuries that are taking that stake, not the central bank. Precisely. At the time when it happened, our treasury was not prepared to come in with the money. The banks were prepared to come with the money because they were worried about the system. And that is how we ended up with the situation like the one that we have had. They had always understood that they would have to exit. It is not profitable for them to do these things because it as an impairment of capital. They would like to deploy this capital elsewhere. That as it might be, let me say to the committee that we have appointed a transaction advisor for us to exit our stake in African Bank. And we must also be cognizant that there are provisions in the resolution agreement that said when we exit, we shall exit as the same proportions as the banks. So we have got, if we sell 50% of our stakes, the process is in motion. Issues of timing with respect to markets, and we cannot put the taxpayers' money at risk by exiting just because we are running for the door, which is why we have a transaction advisor who would take this process forward. DG Naidu?
Thanks, Chair. Chair, I think you've covered most of it. Just to make 2 points. The one is that the Financial Sector Charter Council does publish a report on the status of transformation. I think that they're better placed to get it directly. Chair, when the Reserve Bank publishes its quarterly bulletin, it does publish a statement on by council that doesn't quite give you a flavor of the flows, but you can see exactly where South African assets are held and who holds South African assets here. Chair, the one category of financial flows that I did not mention was remittances. They're significant, they may, etc. When they're done electronically or through regulated authorized dealers or ADLAS authorized dealers with limited authority, we do have a track of those funds as well, Chair, and we track them. Thank you.
That is it from.
Okay. It looks like we are done with the questions, and we are coming to the end of the meeting. This transformation report, members will remember that we had a meeting last year. I can't remember the date. I think Secretariat will have to remind us. If you remember, we're at the old assembly chamber, and we had many stakeholders attending that meeting. We agreed that we should have a follow-up session because NEDLEC, which was supposed to provide leadership in that regard that day. So I think the Secretariat look at the minutes of that summit that we had that day last year, and then we make a follow-up on the decisions that were taken in regard to the financial services transformation, and then so that we can report to members as to what is the next action, and then they will have to provide detailed information in regard to what members are looking. The amendment bill, reserve amendment bill process, public participation, public hearings, oral and written submissions. There is an outstanding report, Alan and Sister Tebo. I think it is that team which is led by Advocate Kanyile. Is it the same team that's dealing with the illicit financial flow, or they're dealing with something else?
No, it's the same team. It's the same team.
Yeah, if I remember, that team should have come to report to the committee in April this year, and make a follow-up with Advocate Kanyile and a team that we have to get that report that is still outstanding. When we meet Treasury with the economic, to present the economic recovery plan, there are certain things that ourselves as policymakers to make policy. They are cautious because it was us last year when we visited the Reserve Bank in Pretoria during the induction week, who emphasized that we didn't want governors to make what is there and they enter the political space. So it becomes our responsibility to engage Treasury when they come with the economic recovery plan, like an issue raised by Deputy Governor Kasim on the output gap as to what does it mean actually, the concept, because it talks about monetary policy being used to stimulate the economy. So we'll want to engage in detail in regard to that concept as to how will it go in a long way to stimulate the economy, because the economy is declining. And if we'll go the 1929, 1934 Great Depression, it means we'll have another 5 years or so growth at some stage. We don't know. We'll have to reconcile all these projections and see how that in itself will translate into creating jobs. And the economy should not just grow, it should also grow in a manner that even the structure has to change. Those who have been marginalized by this economy should come into the economic mainstream. But if we talk about recovering the economy for those who are controlling the economy, that will be problematic. It will not mean much to the people of this country who are in the majority. So we'll discuss that when we meet with Treasury to discuss the economic recovery plan. Thanks very much, honorable members, Governor, Deputy Governors, officials from the bank and its entity, Prudential Authority, and officials from Parliament. Thanks very much until we meet again. You can see in Inkomo Bayadanke Noxte.
Long live the chair.
Thank you very much.